So a very exciting week ahead. If you remember in the last video, I referenced how the S&P 500 was going to make a big decision around roughly 4,250. That's when I recorded last time around here. I said if bulls were unable to hold around a double bottom, mainly because we saw the three black crows set up on the daily. If you remember that, these three daily candles, if bulls were unable to reverse it out of this characteristically bearish setup, then we would see a lot more downside, mostly in a capitulation phase, which is what we've seen now so far after breaking down below roughly 4,220-ish, where this previous low was. We've seen a little bit of a form of capitulation with three major down days. So we saw follow through from this three black crow setup. And the reason why this week is going to be so interesting is because look at where we are now. If you go back over to here, where we had basically 5 or 6 weeks of consolidation earlier this year in between April and May, this is a very critical range, and we're just now retesting that same range after breaking out of it all the way back here in early June of 2023. So this is a clean retest so far. If you're bullish like I am into end of year, we want to see a retest and bounce. And this retest and bounce should be very strong in my opinion, and also should warrant a lot more upside off of it. However, as always, you need to understand risk. In our case, for last week here, the risk was a breakdown back below the previous low, which we had here on this date, October 23rd. So that invalidated the potential of some form of a bounce. So then we saw this capitulation the following couple days. So now we're at the second phase here where there's a potential for a bounce. However, we do need to stay roughly above 4,050, which was the previous double bottom over here during this consolidation phase. So right now we closed right about at 4,117 on Friday. Again, like I said, this is a retest of the previous consolidation zone, which is a very strong level. The fact we consolidated for about 5 to 6 weeks in this range shows that there's a lot of liquidity around this level, and hence there's a potential that we could bounce off of it. So this roughly 4,170 to 4,190 range in this gray box is the previous resistance that we had to break out from in order to warrant this massive rally that we saw throughout the summer. This went all the way from roughly 4,200 to 4,600, so 400 points over the course of about 2 months, a very substantial move, which means that we do want to reclaim this roughly 20-point range in order for there to be confirmation of further upside. So my goal is to see this get reclaimed shortly. Now, there's one caveat to this, and that's if we go to a QQQ's chart, actually, a QQQ did complete a breakdown of a critical trend line. You can see here, we'd been trading within this pattern for a bit, and then it broke recently, and we did see this volume uptick on the break as well. So there is potential for some more downside on QQQ as long as it stays under this trend line. This trend line is roughly at 351-ish, 350, depends on the time of it getting retested in the future, which I do believe we will retest it, which I'll go into in a second. However, we are below it at the moment, which means that it's kind of in a capitulation phase of its own, like we saw with the S&P 500 last week. So there's potential for some more downside here. We do have an open gap over here as well, although not my base case. We do have to be aware of that just because QQQ looks like it's the one that has the most to go to the downside. Other than QQQ though, the S&P 500, IWM, the Dow Jones, all are very, very oversold and have potential for an upwards move from here. So going back to the S&P 500 very quickly here, again, this week is going to be very important to see if we can close back up above this gray range. This would be an amazing confirmation signal. Of course, right now it's kind of like a waterfall sell-off, so it is dangerous to try and step in and try to get in front of this waterfall to the downside unless you do have tight risk. That's the best way to mitigate excess selling if there were to be a capitulation day. For example, we were to wick down to around 4,050-ish. But if you want to mitigate your risk here, we do want to see confirmation back above roughly 4,190. If that's the case, especially on a weekly close, if we get that by the end of this week or the following week, then we are looking at a lot more upside afterwards, likely to go back up and retest the previous downtrend breakdown before that being the first resistance on the way up to higher prices afterwards. So we've seen now a clean breakdown from this head and shoulders pattern from back in July when we made those highs. I was referencing the correction that I expected into September/October. Now we're really at the end, I believe, of this. We didn't get the bounce over here, which I referenced. If we didn't get that, we would see some more downside. In this case, we saw that extra downside. Again, maybe there's a potential of a capitulation day, mainly led by tech in that case, where we see 4,000 4,050-ish, and then a wick back to close above 4,100. Other than that, though, we are very oversold at the moment. I do believe there will be that bounce. I believe it will be a very strong bounce as well to form a major bottom before further upside. So I still stand with that stance. And also that brings me to my next point here, because I'm looking at some form of a major bottom forming here soon. I'd like to add some exposure in other tickers. Something that's very interesting is Meta's flow, especially as of Friday. You can see here these large prints, 2 million and 2 million for the 250 strike for the 419 expiration. These are hefty in terms of premium, as well as they are for April of next year. Not only these prints, but if you go down a little bit lower, you can see a lot of leaps were being added. And this is something interesting, especially because of where Meta's at in terms of its chart. We typically don't see that much premium for calls, and mainly skewed to calls in a single day for a ticker like Meta. So I looked over at its chart and I can see kind of why they were adding those. And it seems like the risk on this, it would just be a close back below this trend line from over here. This is the trend line that we broke out of over here in June of 2023, and we've stayed above. If I were to look at this chart without any form of a bias based on the flow that I just showed you, I would not take a position on this just yet. So it's one thing to note. You could technically take a position and just have your risk, like I said, being confirmation under 280. I don't believe that's the best risk reward. However, that is a scenario. Personally, I'd like to see lower prices on this first. So I believe these prints are actually premature at the moment. So again, never a good idea to just blindly follow the flow. It's a great way to scan for potential setups because this prompted me to look at Meta's chart. And in this case, it didn't match with what I'd like to see from a technical perspective, especially since what I showed you earlier on QQQ, there's still potential for it to fall a little bit more in the next couple of days. We have a clear double top up here. So until this is invalidated by having a close back above roughly 320 to 325, this is a clean double top with potential of it falling lower if it chooses to do so, if there is that excess weakness in tech here to start off this week. So I'm not taking a position at the moment, but I thought I'd let you guys know just basically what I'm thinking right now in terms of what I'd personally like to load. This one would not be, however, something I am interested in and is getting a bit oversold now after earnings is Google. And the reason I showed you Meta first is because sometimes you'll see flow that may look really positive, but it doesn't match your other criteria that you want to see be met before adding a position. That's fine. You don't have to take that position. You can add it to your watch list. I personally have the big tech tickers on my watch list. You can look for a better entry later on. But something that I do like I just said here, would be Google. Just based on a Fibonacci perspective, we are just about at the golden pocket. If we can get a little bit lower price discovery, if the rest of tech does see some weakness from here, that'd be great. Then I could load up on some, whether it be March or June calls for next year and hold that for more upside for potential gap fill. And yes, this is a very large gap. I'm aware of that. It is a lot higher up just based on earnings. However, if we do give it some time, believe that this will eventually fill to the upside. So what I'm going to be looking for is if we do get some lower price discovery to around 115/118-ish, right around this range where there was a previous support after we had this large gap up. I think that's definitely an amazing risk reward opportunity with risk being under, or at least confirmation under 112. So you get the nice golden pocket convergence with key supports over here. I would personally like that. Does it have to fall this low? No. I'd share this today just because I do like this potential setup if we do get it. And of course, like I just said earlier, we did have that QQQ breakdown from this chart over here. So there is a potential that we do see some more weakness here in tech, which could prompt Google going to that target. So again, this week, main focus is going to be the S&P 500 as well as NASDAQ. Again, NASDAQ is going to decide where we do get that major bottom that I'm predicting, just because we did break down below this key range that we basically traded within for the past couple months. So as long as we stay below, we're looking at some more excess bearish activity. But once this does get reclaimed in the future, which I do believe that will be the case, and this would be characterized as a fake breakdown. And of course, you guys know when there's a fake move in one direction, you see an extended move in that opposite direction afterwards, which I believe will be the eventual breakout. So right now, just a matter of the bottom forming, wherever that may be in this range, and then it should be clear skies ahead after that, especially since we are entering a period of bullish seasonality. November tends to be a much better month, especially coming off of that August, September, maybe early October bearish seasonality. And of course, everybody knows December, other than the early tax selling about the first 2 weeks of December, you have that Santa rally and corresponding bullish flows into end of year. So that's my target at the moment. I believe this is a nice opportunity to capitalize or at least enter positions before that bullish seasonality seasonality really starts to kick in here soon. So I'm sticking with that thesis. And the last thing I'll leave you guys with, again, risk is definitely an important aspect to the market. You need to understand risk. Like I said earlier, we talked about the risk in the last video of being a break below this previous low here before, which helped stay out of the market. So it could have this kind of final capitulation that we saw in the last 3 trading sessions. So the risk going forward from here is roughly around 4,050, 4,057. If we did have confirmation below, that would definitely not be good for bulls because that would invalidate this clean retest of the previous consolidation zone. So we do want to see it maintain above from a technical perspective. Otherwise, as long as we can stay up here, especially if we get above this 4,190, 4,200-ish level that I referenced earlier in the video, then we can really start to see things pick to the upside. So other than that, though, as always, appreciate you guys watching this video, and I'll see you guys next time.